Hi, I'm Rick Kaler, and thank you for joining me today. One of the major functions of life insurance might be more accurately described as income insurance. It provides funds that replace the earning power of the deceased. Parents with young children and not a lot of financial resources probably have the greatest need for life insurance than any other class. Insurance is just as important for a stay-at-home parent as it is for a wage earner. My rule of thumb is if you have children, you should have a minimum of $500,000 to $1 million of life insurance. Now you might think the premiums on that would be so high I couldn't afford it. Well, we'll find out in a minute that they don't necessarily need to be. And even $500,000 to $1 million seems so ridiculously high. But until you start crunching the numbers to figure out just how much it costs to raise a child as a single parent, especially when you include possible expenses like maid service, daycare, orthodontics, college tuitions. $500,000 doesn't seem like such a huge sum after all, and I didn't add in the loss of productivity that one spouse may encounter within the first 2 years of the death of the other spouse. So how can this be affordable? This is a lot of money. Well, the way it can be affordable is through something called term insurance. Term insurance, as its name would imply, is a policy that's taken out for a specific length of time, usually from 5 to 25 or 30 years. Pays your beneficiary the face amount on your death. That's just insurance. There's no investment component. There's no accumulated cash value associated with it. It's an expense, not an investment. Just like your homeowners or your renter's insurance or your auto insurance is. Now, if you're in good health, term insurance is typically inexpensive and very adequate for most people. For example, a male aged 32 who's a non-smoker with no real health problems could buy a $1 million 20-year policy for about $40 to $60 a month. A $500,000 policy is going to cost $25 to $35 a month. The longer the term of the policy, the higher the premium. That makes sense. Now, the largest risk with a term policy is that you may become uninsurable and therefore unable to renew the policy at the end of the term. This is one of the advantages of something called permanent insurance. Well, this is a legitimate concern, but it can be minimized by purchasing the longest term policy available. So typically a 20 to a 30-year term is going to be long enough to ensure that your children are raised and educated. Now, I recently heard from a reader who'd been searching the internet and found conflicting advice, imagine that, about the best type of life insurance to buy. Personal finance authors and speakers Dave Ramsey and Susie Orman strongly recommended term insurance. Other sources this particular reader had found said big companies and executives invested in cash value as part of their portfolio. So what should he do? Well, for most people, I'm with Dave and Susie on this one. I advise most of my clients to buy term insurance. If executives have cash value policies, it's usually because their companies are paying the premiums. Such policies, which are also called universal life insurance or variable life policies or cash value policies, permanent insurance, include an investment feature that can have a lot higher premiums. While there may be some circumstances when cash value policies really do make sense, I find that they're typically few and far between for the average person. Such policies might be appropriate as part of certain estate planning strategies, generally for people with high net worth. They may also serve to fund an irrevocable life insurance trust upon the spouse's second death They're called second to die policies. Or pay estate taxes on an illiquid estate, such as a family business or perhaps a farm or ranch. Now, for anyone needing life insurance simply to provide for family members, I still think term insurance is probably the best choice. It really offers the most income replacement for the lowest cost. And the bottom line is this: most people need a lot of life insurance, a lot more than they have, to replace a lifetime of income, not as a way to produce income for retirement. Term insurance really serves that purpose, to produce income, fully fund your retirement plan options with the money that you might save on premiums. Thank you for listening.